Welcome to the Roy Morgan Weekly Update. In a week that saw Israeli strikes on Iran, which had the potential to set off a wider war in the Middle East, 2 knife attacks in Sydney, and the judgment handed down against Bruce Lehrmann, the Labor government has regained the lead on a two-party preferred basis, with support up 3% to 52%, ahead of the coalition on 48%. However, the increased two-party preferred support for Labor isn't due to a significant increase in the Labor vote, but rather a collapse in the Liberal vote and an increase for the Greens, whose preferences, of course, flow to Labor. If an election were held now, the ALP would be re-elected with a slim majority, as they have now, the latest Roy Morgan poll shows. There were mixed results with other key indicators this week. For example, the Roy Morgan government confidence dropped 2 points to 76.5, well below the neutral level of 100. Now, less than a third of Australians, 31%, say the country is heading in the right direction, while a majority, 54.5%, say the country is heading in the wrong direction. In terms of consumers, ANZ Roy Morgan consumer confidence dropped 3.2 points to 80.3 this week, its lowest so far this year. Consumer confidence has spent a record 64 weeks below the level of 85. Looking back over the last few months, consumer confidence has now moved in a narrow band of 80 to 85 over the last 20 weeks or 4 months. As we must keep reminding ourselves, although the Reserve Bank have not increased interest rates since November, the momentum in mortgage stress and cost of living pressures continues unabated, keeping a lid on consumer confidence. The Reserve Bank next meets in 2 weeks' time, the week before a potentially pre-election federal budget. In better news this week, inflation expectations were marginally down for a second straight week, down by 0.2% to 5%. That means Australians now expect annual inflation to be 5% over the next 2 years. Like consumer confidence, inflation expectations have stayed within a narrow band of 4.8% to 5.3% since early December. And now to the latest figures on mortgage stress. And the news is good. Roy Morgan's the only company to measure mortgage stress every month, and the latest mortgage stress figures show a decline of 98,000 in March to 1.5 million mortgage holders, or 30.3% of all Australians with a mortgage being at risk of mortgage stress. The level of mortgage stress is the lowest so far this year. The decline in mortgage stress is primarily due to rising household incomes, which, along with the extended pause in interest rate increases for the last 5 months since November 2023, has allowed this growth to catch up and reduce the financial pressure on at least some mortgage holders. The same reduction in mortgage stress was seen after the Reserve Bank paused interest rates for 4 months from July to October 2023. As a comparison, the level of mortgage stress in March is very similar to the number of mortgage holders considered at risk of mortgage stress in the 3 months to December 2023, which was 1.5 million or 30.3%. In addition, almost 20%, 18.7% of mortgage holders were considered to be extremely at risk, equivalent to 918,000 mortgage holders who are at risk of being unable to pay even the interest component of their loan. Now, looking forward, we'll have new official ABS inflation numbers for the March quarter tomorrow, and in 2 weeks the Reserve Bank next meets to consider changing interest rates. The week after that is a potential pre-election federal budget, so there's plenty to look forward to for those keeping an eye on key policy settings. And finally this week, to a special Roy Morgan business address on the future of retail. In summary, the Australian retail industry has been in flux over the last few years as the impact of the pandemic hit the industry really hard in early 2020, but was soon followed by an extended boom as record government stimulus powered unprecedented growth rates for many in the retail industry. We are now in what might be called the spending hangover part of this cycle, as high inflation and increasing interest rates are crimping the ability of consumers to spend at the same levels as they did in recent years. Looking forward, these are some of the key factors driving the retail industry this year and beyond. First, record population growth is doing the heavy lifting in keeping Australia out of recession. Second, the cost of living crisis is hitting young families the most, but other key cohorts still have spending power. Consumers report spending less on some categories like home electronics, home decor, sporting equipment, footwear, but they're spending more on other things like pets, gaming, cosmetics and skincare products. However, there are real surprise winners in this environment. Online retailers like Amazon, Shein and Temu are disrupting retail to the tune of $8 billion annually. But can their success be sustained? The future of retail is a detailed and comprehensive look at the Australian retail industry and the trends driving change in the industry. And I encourage anyone who's interested to view the video linked on this page and to visit the Roy Morgan website to find out further information on the key takeouts of the address. And that's a wrap. Thanks for your interest this week in Roy Morgan's latest results. I'll be back next week to bring you the most up-to-date readings on consumer confidence, inflation expectations and voting intentions.